With me in the studio here from Capital Network, I'm joined by analyst Ed Stacey. Ed, good to see you. Good afternoon.
Good afternoon.
And of course, for Ed's full report, we're talking MTI Wireless Edge. For his full report, do click on the eye in the top right-hand corner of your screen. Shares in MTI, Ed, performing fairly strongly over the last 6 months or so. Bit of news from them this week. What have they been up to?
So a small acquisition, $0.4 million. So just a small one, a business called Parkland Australia, which is in the smart irrigation segment. It's a value-added distributor for their irrigation systems. The reason we wanted to talk about it is because it's in that smart irrigation segment. Remember, that segment has been growing double digits as a trend in recent years, grew strong double digits in the first quarter. And MTI announced their biggest ever contract a few months ago in the smart irrigation sector, that big contract in China. So it's a big growth segment for them. The acquisition itself is accretive to earnings. So we're raising our earnings per share forecast for next year by 2%. More importantly, it's improving their access to the Australian market, because in smart irrigation, we believe the biggest markets for them at the moment are Israel, United States, South Africa, and China. You can imagine Australia is a big market for this type of thing. They've been, we would say, under-indexing in Australia. This deal gives them a chance to really boost the growth in Australia in what's been a very successful segment for them.
And the last time you and I spoke, you were talking about the growth overall of the group here. Are they still on track?
Yeah, absolutely. So for the current year, we are looking for 10% revenue growth, 25% earnings per share growth. We think that's all on track, driven by this irrigation business doing very well, but also the distribution and consulting business has been performing very strongly. And then looking forward, I think antennas starts to contribute more and more. So it's 3 business segments. Antennas will contribute more, with 5G wireless becoming a big help for them in the civil sector there. So yeah, the growth is still very much all still on.
Importantly, is this growth being reflected in the shares?
Well, no, we still think very much not. The share price now is on a 7 times PE ratio for 2020 on our numbers. Big dividend yield as well. And it's a company with, as we've said, strong earnings growth, but also a strong positive cash position on the balance sheet. Taking all that into account, you'd expect a PE of more than 10 times. It's on 7 times. The shares have been strong this year so far, up 50% from the lows. But we're looking at another 50% to get you up to a sort of sensible valuation in our view.
Ed, good to get your thoughts. Thanks very much.
Thank you.
And for Ed's full report, do click on the eye in the top right-hand corner of your screen.